Today's lower-than-expected inflation figures suggest a rate rise from the Reserve Bank next week is no longer the nailed-on certainty many economists seem to think. A rise of 0.7% for the last quarter means the annual rate of inflation is running at 2.8%, within the bank's 2 to 3% target range. But with pressures building and a close call last month, some think the RBA will still move. Here's Simon Palin.
As the economy gathers momentum, it brings inflation along with it, but perhaps not quite as much as expected in the September quarter. The consumer price index rose 0.7%, slightly lower than anticipated as petrol and fruit prices dropped.
On the surface of it, the number looks quite good. We've seen both headline and underlying inflation come down from where they were in the June quarter.
On an annual basis, the CPI rose 2.8% in the quarter. It's well within the Reserve Bank's comfort zone of 2 to 3%. And it's led some economists to say a Melbourne Cup Day rate rise is now unlikely.
I think they'll be waiting. I expect that eventually we'll see higher rates, but I don't think it'll be on Tuesday.
In fact, they could possibly defer any rate increase until the February meeting in 2011. So that's certainly good news for Australian borrowers, both business and mortgage holders.
Interest rate futures slumped to a 29% chance of a rate rise. That's down from 57% before the inflation figures were released. But as the economy continues to absorb rising revenues from the commodities boom, some believe the Reserve Bank will take preemptive action to head off inflation.
Given that it was such a close call last time, and given that pressures are building, I'd still say that more economists, and I'd include myself amongst them, would expect a 25-point basis rise, because if the bank doesn't go this time, they've then got quite a long holiday before they come again.
And others, like property developer Harry Triguboff, even think rates should go down. He's the chairman and managing director of Meriton Apartments, the largest builder of residential apartments in the country.
If we don't do it, and if we continue the way we are, then the average person cannot buy a home.
Lower expectations of a rate rise next week sent the Australian dollar lower. It shed more than a cent to fall below 97.5 US cents.